Hello everyone, welcome to the Ichimoku daily analysis for the US dollar index for Tuesday, March 23rd, 2010. Well, the green body candle today, and that is quite different than the previous day's candle. The size of the body is roughly the same size as the previous day, but we have a change of colour from red to green. The green body tells us that between the open and the close, the buyers made some net bullish progress on the day. Previous day, it was the bears making net progress. So we can see a slight change of character for this market. The only problem is that the market failed to close up towards the highs. It actually tested that 81 level again that was tested yesterday and has been tested on quite a few occasions previously, and there was downside price rejection. The downside price rejection certainly wasn't as strong as yesterday, so that tells us that the power that the bears had yesterday has evaporated. But the bulls really have failed to take control of this market. The bulls have closed the market at the mid-range level, and that denotes the bulls, nor the bears, closing with control of this market. Neither side has gained control, and the shadow on the top tells us that the bulls have actually lost commitment throughout the day. So when they attempted to trade the market up around 81, the sellers came back in and sold the market off. And as we've seen, they didn't sell it off as strongly as the previous day. Now, previously we noted that we had this very strong uptrend and a potential head and shoulders reversal pattern, but the market failed to go on with it. Here we had the left shoulder, the head, and the right shoulder. We had the breakout, but the market failed to go on with it. And this is something, as we've noted previously, that when we have these patterns and we think that they're completing, even with we had a bearish close, two bearish closes down below the neckline, we need to take into account the amount of support that's offered below, and there was very strong support at 79.5 and certainly at 78.94. So that really did raise some doubt about the viability of this head and shoulders pattern. Actually, from that 79.50 level, the market did appreciate in a quite a bullish way with some very large green body candles, but now we have some loss of strength from the bulls, and this 81 to 81.4 level of resistance starting to come into play, and we've got selling coming in as the market trades down to those levels. Now, the market is trading up above the cloud or the Kuma, so we still do have a market with an overall positive bias, and the market is still trading up above the Kijun-sen and Tenkan-sen, but those indicators have turned flat, and that's reflecting that the market is attempting to find equilibrium in both the medium-term and the short-term timeframes. So we do need to be aware of that. Now, the Kijun-sen actually coincides with that 80.4 level of potential support, which was previous resistance and support. So there is a strong chance that if the market does change trend to the downside, then there's strong support there. Certainly just below there at the Tenkan-sen and down to 79.5, and then all the way down from the top of the cloud down through to around 77.5 is very, very strong support all the way down through there. To the upside, obviously, this 81 to 81.4 region is such a strong area that the market really will need to do a lot of work to trade up through there. We can see how the sellers have come in very, very strongly as the market traded down through there. So overall, the market retains its positive bias, but in the fast to medium-term timeframes, there is some slight bullishness, but certainly not enough bullishness for the market to attempt a strong assault on the 81.4 level.